Hi, I'm Diane Brady, Assistant Managing Editor at Forbes, here in Forbes Newsroom, and I am with Shelley Stewart, who is Senior Partner at McKinsey and also leader of McKinsey's Institute for Black Economic Mobility. Shelley, thanks for joining us.
Thank you very much for having me.
So we're talking about the latest research you have out with regard to Black consumers, financial services. I know it's something you've been tracking for some time. Tell us some of the surprises from this latest study.
Yeah, absolutely. And maybe I'll start with the why on this one first. And as you said, we've been talking about this topic for quite some time, really since the origins of the institute that I lead. And I think at a basic level, the ability to access cash, to save, to invest, and then to ensure and protect against financial downside are really, really critical to building wealth, right? And building a stable environment for yourself and for your family. And so as we did this latest research, we found a few interesting things. The first is when we surveyed Black consumers, we found that there's a real hunger to actually spend and engage more in the financial services sector, so banking, wealth management, and insurance. That they want to be more engaged, and they're actually willing to spend more on these services to get their needs fulfilled. Mm-hmm. The second thing we found, which is interesting, is there's a very, very, very high level of dissatisfaction relative to other consumers across pretty much all categories of financial services broadly, with the exception of credit cards. So if you look at checking and savings and investing products and insurance products, Black consumers are significantly more dissatisfied with their choices than other consumers.
Is there a reason for that? Just to pause a second, what's the source of dissatisfaction?
Yeah, I think there's a couple of things. I think there's some historical baggage associated with the Black community and interactions with the financial services sector broadly, and so some of that, I'm sure, certainly lingers. But what I would say, and we'll get into this a little bit later, is there are some structural differences about the starting point of wealth and the income dynamics, and even the access in various communities to especially on the retail banking side, the physical infrastructure. And so the whole suite of products and customer experience is not tailored per se to the needs of this important customer segment, and it shows up in the way they're actually experiencing these products and services. Mm-hmm. And it's interesting because the last point I was going to make is that if you actually look at the spend over the next, call it decade, between now and 2030, we expect there to be a cumulative $225 billion of spend on financial services. So the pie and the prize is actually quite big for those who decide to focus. And if you think about how we get to that number, the actual underlying growth rates are actually faster than the growth rates for other segments of the population, both because of the desire, but also the demographics. And so if you think about this notion of granularity of growth and growing faster than the market, well, one way to do that is to serve fast-growing, underserved customer segments. And Black Americans happen to be that in all of the subsectors within financial services.
And they're not brand loyal, so if you deliver, they will come, which is interesting. I mean, one of the things that struck me in looking at this study was, first of all, you talked about the baseline numbers with regard to household wealth and some of the various issues that we've talked about for some time. It doesn't appear that the numbers have moved that much. I mean, can you give me some sense of what gains we have seen, like even from the time when you started this research at the Institute to where we are today? Has there been much growth, much progress?
Look, I think these are obviously issues that have persisted for quite some time. And the nature of this kind of problem is that it's cumulative and it compounds on itself. And so I think we have to be talking about 5, 10, 15, 20-year periods. And so in that sense, we haven't seen much progress over the last few years. I will say the one area where you've seen some progress historically is on the income gap. You've seen some contraction in that, but not to the point where it's closed for Black Americans, both women and men. And certainly on the wealth side, you've seen the number kind of the gap bounce around, but not really get anywhere close to closing. And actually, typically, when you see events like recessions, or in this case, a pandemic, you tend to see these gaps actually widen. We'll see how things kind of play out coming out of this crisis. I mean, there was a lot of attention focused specifically on the Black community because of some of the social unrest and murder of George Floyd. And so that may act as a counterbalancing force. But I'm worried that some of these things may actually widen in the near term because of some of these underlying events. That's at least what history suggests.
Now, when we step back again, when I think about the banks, financial services institutions, there has been a focus on Black consumers, certainly in the aftermath of George Floyd. Is there anything that, any of the levers that are not being pulled appropriately, or what advice do you have in terms of what actually moves the needle? Because I think the desire is there, a certain acknowledgement of this population being one that is high growth, and maybe challenge me on that if that's actually not the case, Shelley. But given the attention, what are they doing wrong?
Yeah, I think the desire is there, and I think we're still early stages, and it will require innovation outside of the existing business models. So I think there are a few things that have been happening that are interesting. So certainly on the fintech side, where you've seen digital first players fill that void and deliver, right? They don't have the constraints around physical footprint that some other institutions suffer from in their go-to-market. So they're a little bit more nimble. Their cost structure looks a little bit different. They can tailor their customer experience to actually work better for a demographic that's been underserved. And big incumbents are also trying to do this. So I think that the whole notion of using fintech as a platform for distribution to get to this kind of last mile point where customers are, I think, is one that is still in the early days, but has a lot of promise, assuming the investment's there. I think the second point I would make is there's a big issue with credit and developing credit, and it's so critical. I mean, many of us take for granted that we have credit and a credit history, and we don't even realize how often it comes up in our financial transactions and daily lives, and how important it is to wealth building, and how much of a barrier it is if you're credit invisible or frankly just poor credit. And one of the things that has been toyed around with in the past, but I think is picking up steam, is this idea of alternative credit scoring. What are the other metrics and things that occur naturally in people's daily lives, whether it be a utility bill or rent payment, that we can use to better gauge people's underlying likelihood to pay back things that they borrow? And so I think that's a second point. The third is you're seeing investment management firms. Again, a lot of them are digital first, but tailor and tier their fee structures to better fit the starting point of wealth of the Black community, and that will, I think, bring more people into the marketplace. And so generally, just continuing to innovate. You saw a large bank recently announce that they're doing no money down mortgages in certain zip codes, and also.
Is that a good thing?
So I believe that. Look, we'll have to kind of see, and I haven't dug through the term sheets on the given deals, but I think in practice, the idea that you don't need a down payment and we're not going to offset that with really, really high interest rates that make it not affordable is a good thing. I do think it needs to be paired with other programs and measures to make sure people can stay in those homes. But yes, I think trying to be innovative and then also putting guardrails on it so you're not exploiting, which I think is what everyone is trying to thoughtfully do, is a good thing. We just can't just assume it's going to work. We have to look at what are the wraparound things that need to coincide with that. So I believe there are some good innovative things going on, and it will take some time to see what works and how well and what is scalable. But I do have some level of optimism, and you see some of the same stuff on the small business side and supporting diverse-owned businesses as well, some innovation.
Are there other factors when you think about what motivates Black consumers? I know that any time we engage with any institution and part with our money, trust is always a factor. And you mentioned innovation. I don't know if there's other things that you've gleaned from your research, your clients, or just talking to people that you think are moving the needle and that we should be doing more of that could actually motivate behavior change on the part of the customer.
Yeah. Trust is huge. And then the question becomes, how do you develop trust with the consumer? And frankly, in many instances, you're trying to cover a deficit that's been created historically. So there are a few ways. The first, which we found loud and clear in our research, is Black consumers expect you to show up in and for the community for the community issues that they care about. Mm-hmm. And so your commitment to diversity, equity, and inclusion, your commitment specifically to advancing the Black community is really important to the Black consumer generally, if I had to generalize, and it goes towards the trust. And that doesn't mean just showing up in marketing and marketing collateral and advertising. That is important. People do want to see themselves right in brands they interact with. But are you putting your money where your mouth is? So when you commit dollars to philanthropy, what philanthropic organizations are you giving to, and what purposes and what mission are they advancing? And how does that resonate with the things that are core to my values and what I care about? When I log into your digital application, or when I go into your branch or your location, what is the customer experience like? Who are the people? What's the level of diversity that you have with the folks that I'm interacting with? One of the other things that Black consumers index on a lot is getting accurate expert information. And so oftentimes having really good, clear and transparent explanations of features and fees and how this helps to build savings and wealth, really just trying to seek extra information because of that historic lack of trust. And so to the extent that through your digital and your in-person channels and the way you're activating influencers, you can convey the specifics of your product and how it benefits them and covers all the points in their head that they're a little bit nervous about, you're more likely to be successful with that customer segment.
Great. And let me step back just in terms of McKinsey's own engagement with regard to the Institute for Black Economic Mobility. Remind us a bit of the genesis of this and what the mission is.
Yeah, the genesis of this is really a recognition that if we are going to sustain our economic system, and I think there are frankly some elements of politics and democracy embedded in this, we're going to need to build a more inclusive economy. We need to build an economy that works more robustly and more regularly for folks that it hasn't historically worked for. And we at McKinsey have the fortunate position to sit at the confluence of the private sector and government and social sector and have so many relationships and find ourselves in so many different conversations. We felt we had a unique opportunity to bring an objective set of facts as a starting point, and then to help aggregate and disseminate solutions that we can all collectively work toward. There's no doubt that the moral case, in my opinion, at least, I should say, maybe some doubt, but in my opinion, is quite strong for bringing more people into the economy. But we also have shown through our research, in McKinsey more broadly and in the Institute, that there's a macroeconomic case in GDP and a micro individual business case, meaning profits, of better serving a broader set of customers and having more people fully participate in the economy.
Great. Well, Shelley Stewart, thank you very much, and to be continued, I'm sure. Thanks for joining us.
Thank you for having me.